So you're thinking of buying a new house. The kids are growing up. You need more bathrooms for all the girls in your house, whatever the case may be. But the houses in your neighborhood that you're looking at are like $300,000 and you don't have anywhere near the cash for a 20% down payment. Do you have other options in the conventional loan market? Well, yes, you do. Stick around and let me tell you what they are. I'm Carol Ann Reed with The Real Deal, here to give you the clarity and the confidence that you need to go and make the right real estate decisions for you. If you're new, welcome. And if this information sounds useful for you, go ahead and click the subscribe button below. So today, we're here to talk about conventional mortgage loans. So in the mortgage loan market, there are FHA loans. I'm sure you've heard of those. Has a nice low down payment. However, you have to pay a chunk of money at the front, a mortgage insurance premium up front when you close. And then you have a monthly mortgage insurance premium you have to pay every single month for the entire life of the loan. No getting around it. And because it's FHA, they have certain standards that the house has to meet. So it calls for a separate FHA inspection, which could it could shrink the pool of options that you have for the house that you want to buy. If you want to get creative in your financing, you could go for something like a contract for deed. However, the down payments on those are usually 10 to 20%. So that doesn't really solve your down payment problem. Plus the interest is a little higher as well. So does the conventional loan market have the flexibility that you're looking for in a low down payment without all MIP, mortgage insurance premium for life? Yes, it does. Stick with me and I'll give you the details. But first, if you like this video, please go right down below and hit that like button. So conventional mortgage loans, they actually start at 3% down, just like FHA does. However, in the conventional market, 3% is generally saved for a first-time home buyer. So are there other options? Yes, there are. They also have 5% down. You can get a conventional mortgage for 5% down. The caveat to that is you will have to pay what they call private mortgage insurance. It's the same kind of mortgage insurance that you have on FHA. They just call it something a little different. Private mortgage insurance, because this is a privately held mortgage. Now, the good news is with a conventional loan, that private mortgage insurance can be canceled as soon as you hit a loan to value ratio of 80%. And in fact, that private mortgage insurance automatically cancels when your loan to value ratio gets down to 78%. But if you don't want to wait that long and you know that the equity has gone up in your house, you certainly can call the bank and see if you can get a new appraisal. If that new appraisal comes out to be higher than the appraisal that you got when you bought the house and you've paid off on the loan so much, you may be able to hit that 80% threshold even faster, and the bank may be willing to cancel that for you. Now, do you have to go 5%? No, you don't. You can go any percentage that you want, anything 5 and above. So if you want to go 8%, you can do that. What you need to know is that that private mortgage insurance that you're going to have to pay because you are putting less than 20% down, that is based on several factors. One of those factors being how much you have as a down payment. So the higher the down payment that you put down, the lower that private mortgage insurance is going to be. And also the balance of the loan. So the higher the loan amount that you get, the higher that private mortgage insurance is going to be. So again, the more down payment that you put, the better. But you don't want to get yourself in a situation where you get cash poor, that you put all your cash into the down payment and you have nothing left in case you need to buy a new washer and dryer or something like that. So you don't want to be house poor. You need to find that medium in there that makes you comfortable, the highest amount that you can afford to put down, and still have something in reserve for emergencies. And just so you know, I am a real estate agent. I am not a lender. So please do your homework. Go to your lenders, shop around, see what options all the different lenders have to give you. And I am sure that you will find something that will meet your needs.